Today is January 7th, 2025. My goal in this video is, first of all, I'm putting together something for Google Notebook. And the intent here is to see how well a video like this will capture the notes of what I'm trying to reproduce essentially. So the very first thing I want to do is just go to the candle science that I did the night before, which shows that the monthly is inside. It hasn't tested any fresh discount or raise. The weekly, I'm just walking down through the high time frame order flow to try and arrive at a bias. The weekly has disrespected the previous week high, and it could be sweeping it, but it could be a low time frame form of respect. I mean, it's going up, but it's actually intending to hold and going to go higher. And the previous week, it swept the previous week's low. So I'm saying, okay, that gives me a potential bias for a long. It's the first thing that gives me a potential bias for a long. And then on the daily, you have the formation of a fair value gap. So if I take the daily range low as being an important marker, it's the closest thing on the low side that represents a PD array. The low, and then the high is the closest thing that represents a PD array. That is where our bias should be determined, essentially. If we sweep the highs, that could be a short, or it could mean that we're continuing. And so you want to frame, sort of your daily boundary inside of that, which is what I did. So then I had these hypotheses on the 4 hour, which shows a fair value gap below that has been tested, and then one fair value gap below that. And I said, okay, if it swipes down during the overnight and then does a bullish sharp turn in the pre-market, then it may go higher. Meaning if it comes down and swipes all this out, if it takes out the daily range low, that actually indicates more bearish indication. Probably a stronger bearish indication right away, but it may swipe. If it comes down early, it may still rise and then finish below this. But the other thing is that I said if it swiped up high first in the pre-market, then going down would actually be more bullish, because if it goes up and then comes down, that's going to get the most amount of buyers on the offside so that you can take their liquidity away. And then in the evening session, what I saw there was that the 1 hour was showing showing a bearish sharp turn on the 1 hour, having swept the previous week high. So, but basically undecided because you have these 4 hour fair value gaps below, and we're basically in the middle with fairly large news today. So with that in mind, again, I'm going to focus on bias. My general bias coming into the session was I had no bias. Like I just said, I'm not sure. The only indication I have on a higher time frame is long and nothing else. So as I came in, and I think there we go. Let's just bring it back to what I saw. What I started to see here, I think I'm just going to get rid of these for a second. Okay. What I started to see in the early AM was that we were moving higher. We'd swept this high here and then started to move higher. And then once I saw that we were not, especially on the 5 minute, when we closed up here at 840, I was like, you know what? I think we're going to test up into here. And in the AM, what I saw was that you have this, you have no fair value being created here. So in my mind, what that's telling me is that it's got nothing to bounce off of to go higher. So then more than likely, if we do start to give way, we're going to give way all the way through to this and perhaps more. And that's kind of where I was going with it. So as this played out, actually, I want to just go back to this bar specifically. I said this in the morning. I said, hey, once that, go ahead and finish that bar out. Once I saw it sweep the high and then close down there like that, I said, oh, wait a second. That could have been, that's a potential, it's a 1 minute ST. And, that's a reversal. No question. It's an outside down reversal after sweeping a session high. And I'll show you there. It's yesterday afternoon's opening high. So it sweeps that. and then rolls down. And there's no fair value gap there. It's just a session location. And I said, oh, that might be a boundary to frame a short off of. The boundary is saying, all right, there, this is not that you'll necessarily get your short in that, but that if we continue lower, the only thing that you have to hold it up is low time frame stuff. So as you play this forward, I'll just hit play. You actually sweep down into the 930 open, and you go through a 15-minute. You get all the way down to the 15-minute here. But in my mind, the damage was done. I thought, okay, wait a second here. This is really clear that this is not, seems to me this is clear this is not going higher. So I thought if we could sweep this liquidity here, if you're noticing my finger, then that might be a way down. So my point is that at roughly this period of time, 930, 940, the bias, which was high time frame looking long because of what had happened here, started to shift short. And the reason is that if you look at the hour, we had tested up, we'd closed higher here and then swept all the way back down, showing there was a sort of a sharp turn look here with no fair value gap. Now, when that no fair value gap happened, the thing that I was looking for was unusual context. And so that I could see if the boundary would actually hold. What's the unusual context? Well, the unusual context would be, I would expect that if we are actually going higher, first, we shouldn't form any fair value gaps, but also we shouldn't sweep any liquidity and then sharp turn again. So if you watch this, look what happens. We come in and we sweep this liquidity right here. And I'm always conscious of the manipulation point right there. What happens when we get to that point? We sweep that and then watch it again. And we form fair value again. So when that happens, I say to myself, wait a second, then that really starts to look like a sweep. And I think you can actually start to look seriously about getting short. Why? Because you're in a kill zone, and the unusual context is you see a sweep of a session high, which leads to a instantaneous reversal. And then we are also in a 1 hour order flow. So what is the alignment? We see, if we go back to this, we say, well, the bias started, the only thing I had was long on the daily and on the 4 hour. So that's good. But the 1 hour shows a sharp turn. Really, all you would need to wait for to have everything confirmed would be a 1 hour gap. So you're basically saying, okay, well, if I want to wait till 10, 11, 12, so I want to wait till noon, then I'll know that the underlying context of the higher time frame is actually shifted. So the narrative was reading short. All right. So then as it starts to play out, you see, boom, we test into that fair value gap, and we come all the way back up and then right back down. And there you go. By that point, it's over. It's flying down. Okay. So, and you see a fairly substantial imbalance gap right there, 3/4 of a point. Wow, boy, it really dislocated right there. Anyways, so then then you're just chasing what? This is continuation, and the expectation would be like you're going to get to the daily range low. And for me, there's at this point, and this is something that I'm not used to doing, but now we have a target. I have a context-based target. One would be this 60.03 and the 59.80. And the boundary is this protected high right here. So if I'm correct, then basically we should be forming order flow legs all the way down. And let's just build them out. Okay, so you see instantly, you see that we do form a fair value gap. Does it overlap any important? There we go. So you could immediately put that on there and say, well, if we see something there on the 5 minute, that might be worth looking for a short to see if we can get down to 59.81. And that would be a context target based on this being a protected high. And And then sure enough, boom, it smacks in there. Now let's look at the 1 minute. What does the 1 minute do? It comes up. And what I want to see it do? Well, I want to see it gap and move down, or I want to see it swipe and then do an outside bar. So all this does is it swipes up and gives you an outside bar, holds, and then closes. Oops. And it does it right inside the location. So your trade there is you take the outside bar and there's your stop there, or you wait until it gaps right here and then you just sell it right at the gap, which can be scary because you're like, oh, that's just going to pop right back in my face. Yeah, but it really shouldn't, because we're headed to this target right here, 81.75. Boom, target hit. So if you'd taken that short, if you take it there, obviously that's a great, that's a great risk to reward. But also if you take it again here, right there, as soon as it forms, and it's still 2.7 to 1 on that trade, and takes 3 minutes to play out. And then what we do is we're gonna wait for lunch, because I want to show you the example of what happened here again. Now I want to say, well, wait a second. How do we form a new boundary? Are we going to go back higher when this 1 hour context forms? Or are we going to continue lower, or are we going to go higher because that's actually the end? Let's see, pound it down. Okay, roughly right there. I'm going to come back to this in the afternoon session. Now, what I was seeing was on the 4 hour, you see that we've tested the fair value gap, and we've gotten a 5 minute, 4 hour fair value gap, and we've gotten a 5 minute ST, gap in, gap out. And my expectation was, oh, okay, we've taken the daily range low, so we're not going to go any further. There's nothing down here for it to go for. It is a bullish context on the higher time frame, so it should be going higher. So I was saying nothing below daytime frame, bullish order flow. The gap, at the time, I think did close, but still, it would seem like we're closing into a 4 hour gap, which should result in bullish order flow. And I saw a 15-minute fair value gap test after an ST, and then a 5-minute ST, and then a 1 minute inversion fair value gap at the imbalance, 1 minute gap, etc. I'll walk through all of that. And again, what I'm trying to do is say we've got we call that a usual context, which is that we're going lower, but we're already at a high time frame array after having taken out the daily location low. So the expectation would be that potentially we actually would reverse here to maintain reverse or maintain the bullish order flow. So it's about forming a boundary. How would you do that? Well, in this case, a little different. I'm going to focus a little bit more in on the 15 and a 5, but let's walk it forward to what I saw. And that is that we gapped on the 15 minute here, and we gapped on the 5 with a couple large gaps. So focus your attention on the 5 minute. I'll just transition to it here. Okay. You focus your attention on the 5 minute, you'll see that we gapped again, we tested, and we made a new high. So that's order flow confirmed as far as I can see. And then when we don't hold that, when we actually come back through it, then I start thinking to myself, okay, well, then probably that's because there is a higher time frame or a PD array below it. So it's going to want to test down into that area. And how does it do that? So let's go ahead and play that forward. Sure enough, it comes into that. And then I said, okay, well, this is important. If we are going to actually go ahead and go long here, then I really want to see a sharp turn. Let me get to the 15 minute here. I want to see a 15-minute, or not a 15-minute, excuse me, a 1-minute sharp turn at the 15-minute gap and imbalance. And you can see that, like, one of my final notes was relative to this. Why did I put that there? There was a reason I put that there. We'll come back to that. Oh, it must have been a 15-minute. But anyways, what I want to do is I want to see a 1-minute turn right here. So let's go to the 1 minute, and we will stay on the 1 minute for the rest of the time here. There we go. And holy cow, we're already at 15 minutes. I don't really want to watch this video. And there we go. We'll just walk through one bar at a time. And so right here, I'm thinking, okay, we're at the inversion, or not the inversion, that's the imbalance right here. This is the 15-minute imbalance. And we have a 1-minute gap right there. Oh, that's what that is. No, that's not what that is. This must have moved because that is the original 5-minute gap. Why is that there? Oh, I see. That was the, what in the world is that? I don't know why that's there. I don't know why this thing is here. I said gap above this and buy, but I still don't see why I did that. We'll see if it develops. See if I can. No, I don't see why that was there. No, I don't see why it was there. But what I was hoping is that we would actually run back up to the hourly, that we would run back up to the hourly fair value gap here. We would that this would hold to run us back up to 6405 end of day stuff. So as we go to, you didn't see that, up to here. This is the bottom of the hourly gap. And the whole point of this is that what I was seeing was unusual context, and I was trying to confirm if it was actually, if it warranted going long. The unusual context warranted going long. So if I put the 15-minute gap on there so that we can see where it's at, here's what's happening. You've got a 5-minute gap below you. You've got the 15-minute imbalance. You've got the 15-minute gap, which has been being disrespected by a 1 minute. And then what you see is what looks like an attempt to run up and close a 5-minute gap, which was right there. And that's what it was right there. There's a 5-minute gap. That's why I put that on there. That's what that was right there. So what you see is an outside bar up. There you go. That really looks like it's going to try and continue. But I said, I'm not gonna buy that. I'm just gonna wait for the entry pattern. And you get a little swipe into the imbalance and it holds. And there we go. And I said, okay, well, it is being held below this gap. So what this needs to do is close that gap right there, this 5-minute gap, close it up, hold, and then gap above, and then we will be going long. But otherwise, we really need to be thinking that this is going to give up and go short. And so it's swiping a little bit more liquidity. Time is it here? Or it's 2 o'clock. So right there, I'm thinking, boom, that's going to take off. Sure enough, it does. Takes off. Leaves a really tiny gap. And I take that and I say, okay, I'm taking that long. I'm taking that long with the expectation that we're gonna gap through this. But we could wait. And what happens? And this is where the unusual context turns into a usual context. So watch what's happening. Look at these closes. Zero in on this. Well, look what's happening. You took liquidity here, came up again. Look at where these closes are, and then you swiped it again and closed inside. I said, "Oh no, that is not going anywhere." So I closed that long, and I said, "All right, it's time to look short." And if it's right, it'll gap or have a big, large enclosing bar. Boom. And I said, okay, we're going short. And now it's take the first pullback you can get. There it is right there. Boom. And now it's ride. Take this thing all the way down to here. Right there. I don't know if it made it or not. Yeah, it does. So the trick of this one is that, you know, you get in a little early and then it wants to take a little bit more, and you got to be comfortable with that. That it left liquidity up there and it wanted to grab into it. And so that's important to understand. And then this target ends up hitting. The reason why I wanted to point this out is because it took waiting and seeing this unusual context here and watching it turn back to a usual one before you said, oh, okay, that's when I know it. That's when I knew it was going to go, is that the unusual turned back usual. And then I was like, okay, it's time to go short. And that's when it's gonna take off. And so what that basically means is, on the day with where I expected it to be, oh shoot, you've been looking at the 15 minute the whole freaking time and not the 1 minute. That blows. Let me just repeat what I said there just quickly. I zoom in on this here. What I was talking about is that this comes down to test this. It leaves a little gap right there. I'll just replay it one more time. Hate that. Managing two things at once. Will this 15-minute fair value gap and imbalance turn because there's no higher time frame PD array below us? Will it? And that was what I was thinking might happen. We create a gap. We get up to the 5-minute upper gap, pull back, bounce off of the 1 to get to the 5. We get to the 5, take liquidity, and then it's out, and then it's outside down. Why is that happening? It should be gapping. Why is it not gapping? It's not, it should be gapping here. It's not gapping. And that's what I was saying is that this unusual context going against the hourly time frame, which was telling us that we were actually going to go lower, said, oh, well, this might be telling us we're going to go higher. And as soon as it did that, I said, no, we're actually going to go shorter. So to me, as soon as that happens, you can just sell that right there, put your stop above, and chances are you'll be all right. But then you can sell the first, you know, usually in these situations when I've got a couple of fair value gaps, what I usually do is I wait for it to be tested, and then I wait for it to be tested again and get a liquidity run, a local liquidity run, and then I take it. And I take it at the liquidity run, not when it's closed. But then this comes again, and it repeats that same pattern. It comes up and then takes it, and then you just sell it as soon as it takes it, and then usually you're okay. But that goes down, and then that runs straight to the target in a few minutes. And again, I think that is what's clear about that, or what's really clear to me about that. And this being the target right here. What's really clear about that is that when the market was ready to deliver price, it did so quickly, and it did so by, you didn't need to invalidate the unusual context so much as it didn't validate itself. If you waited till it was all done, yeah, you could have gotten involved lower or whatever. That's fine. I'm not saying anything against that. But what I am saying is that the unusual context showed that we might go longer. And then when it got to the first premium array and took liquidity, it immediately sold off again. So that's behavior that is not consistent with the unusual context. It's actually inconsistent with it. So that gave me confidence to say that it's easy to go short. So in this way, we opened up with a bias. The narrative said short. We found a boundary that created a context. We saw a target. Once that target was taken, then we reestablished a new boundary and target based on the unusual context being or indicating that was being invalidated, and then finally it was. So that's really the end of what I wanted to say here. And I think, again, this is a habit I really need to form and take very seriously, so that I can be very consistent with it, and just, you know, as often as I have an opportunity to see clarity on the charts, trade in that way. That's it.